A lot of people think that like 1 megawatt is the same as another megawatt. Like they think that it's just like all kind of fungible. There are electricity capacity factors that are much better than others, and certain assets are much more reliable. When you see renewables not functioning properly or just not producing enough to meet demand, you see base loads ramp up like nat gas or coal or something like that. China is the second largest country by population in the world, and the CCP is a monolith. That doesn't mean that there aren't, a bunch of different pockets that within it, right? And so if you know someone at the CCP, if you're well connected, you're still hashing, right? On a long enough time frame, something like this is necessarily very good. And I also don't buy the argument that it's necessary for Bitcoin's like security budget. Like that's something that a lot of people say. It's like, well, it's raising transaction fees and eventually we're gonna have to rely on transaction fees, right? And there will probably also be alternative uses for block space or alternative ways to monetize it that we haven't even thought of. I kind of shudder to think that like, monkey JPEGs and like text-based inscriptions are gonna be the thing that keep miners afloat.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Colin, glad we could sit down and record a quick podcast.
Yeah, absolutely, man. Thanks for having me, Joe. I've been looking forward to this.
Of course. Yeah, no, I feel like we've done Twitter Spaces before at least, and DM'd and obviously followed each other for a good bit of time, so it's good to connect in person.
Yeah, absolutely, man. Loved what you did at Blockware. Really happy to see you at Unchained. Great hire, by the way, guys. Big fan. So, and yeah, it's cool to see. It's cool to see like these high quality podcasts from some of the Bitcoin companies in the space. Because a lot of times some of the media companies, they have a different kind of angle. You know what I mean? And it doesn't always capture what I think are the most important topics. So
Yeah, it's cool to see Bitcoin-focused companies putting out great Bitcoin-only content.
Yeah.
I think you guys at Luxor have obviously done a great job with that, with so many different reports that you guys have put out over the years. The Hashrate Index website, that website is like one of my favorite. When I worked in the mining industry, it was one of my favorite websites to look at actual good mining-related data. So I'm excited to dive into some of these reports that you guys have put out.
Man. Let's do it.
Sweet. Let's start off strong with the halving, right? The halving's coming up, I guess. Right now, I think it's slated for April, like mid-late April. What's going to happen, especially from a mining perspective? Are we going to see this crazy capitulation? Are people going to, escape and get by? What do you think is going to happen?
So, quick anecdote, and then I'll answer your question. I am in a group chat with a bunch of Bitcoin mining professionals, and obviously they're talking about let's do a halving party, right? Like let's like get everyone together and like watch this thing happen. And it's like probably the only industry in the world where like the mining or the industry professionals are like looking forward to a party where they're watching their revenue get nuked by 50% in a matter of seconds, right? So brief rundown of how this would affect miners from the way we look at it in terms of hash price. So most people probably don't know, hash price is a way to measure Bitcoin mining revenue potential for a unit of hash rate. So we measure it at Luxor in terms of petahash, dollars per petahash per day, or Bitcoin per petahash per day. And for those who don't know, a petahash is 1,000 terahashes. 100 terahashes would be like kind of a normal industry standard S19 Bitcoin miner, or like an M30S or something like that. Now they're coming out with more powerful machines like the S21, which is 200 terahashes. But so when we talk about one petahash, you can roughly imagine like 10 machines, right? So the reason we measure in hash price is because when you're a Bitcoin miner, you've got a few inputs that you have to worry about in terms of what affects your profitability in a given time. Obviously, you have your electricity price, which is going to dictate how much profit you're actually making. But it's not just Bitcoin price that affects how much you're making. It's also where the mining difficulty is at, because that is going to dictate how many rewards you can expect to earn. Based on how much competition is on the network. And also, as we've seen recently with all the inscriptions and Ordinals stuff, transaction fees can make a huge difference. So hash price accounts for difficulty, Bitcoin price, and transaction fees to show at any given time what miners could be making from their revenue. So when the halving happens, hash price is going to get cut in half immediately. And right now we're at about like $93 per petahash per day. A lot of that has been driven by the recent like Ordinals and inscriptions activity. So we're seeing these crazy pumps in hash price that are like kind of hard to predict, because just randomly like the reason this most recent one's happening is Binance listed one of the inscriptions, Ordi, and obviously that's just catalyzing all of this activity to mint more of these. They're text-based inscriptions, the ones that kind of drive a lot of this transaction fee revenue. But so once the halving comes around, what you're going to see is, let's say the halving happens tomorrow. So we're at $93 per petahash per day. You would immediately see mining profitability drop to like $46, $47 per petahash per day. That puts a lot of miners in kind of a tricky situation, because that assumes, like, depending on what your electricity price is and depending on what your machine efficiency is, at $47 per petahash per day, your break-even power cost, it's probably around like 5 or 6 cents if you're running like a new gen rig, like an S19J Pro. If you're running like an S21 or an S19 XP, that break-even price is going to be a little bit lower, probably around like the $20, $30 per petahash range. So my personal belief is that after the halving, what you're definitely going to see, like you will absolutely see miner capitulation. You'll probably see it from those kind of mid-tier and kind of smaller scale miners, right? Who have hosting agreements where they've got like $7 per kilowatt hour, or even like, maybe even like six and a half. And you're going to probably see a pretty big shakeout in what we would call like the hosting industry in Bitcoin mining. So, a lot of Bitcoin miners will build out capacity. They can't fill all that capacity with machines they buy themselves. So they have hosting agreements with miners who need rack space, but they don't want to build out the facilities themselves. And a lot of the times, obviously, that comes with a premium on your power price, right? Because the hosting company has to make money. And if you are a low MOQ, like low minimum order quantity for something like that, your power prices are much higher than if you're a huge miner with like, hundreds or thousands of machines. So, I mean, I definitely think that what you're going to see is you're going to see a lot of those mid and small time operators who kind of came in during the last bull market. They're going to get shaken out first. Obviously, anyone who's higher up the cost curve or who has less efficient machines, they're going to be thrown out. And, honestly, I hate to be like this, but I think that it's going to be a tough time for North American miners, because we have competitive power prices compared to like Europe. There's more energy independence here. We actually produce oil and natural gas domestically, so that's huge. We also, in most states in the U.S., don't have the same level of like, climate taxing on energy assets. But, the average industrial cost of electricity in the U.S., depending on the season, because it goes up in the summer for certain areas and it goes down in the winter for some areas, but then it goes up in the winter for other areas that need heating and stuff, like colder parts of the U.S., the average industrial cost in the U.S. is roughly around 6 to 7 cents per kilowatt hour. So, if we don't see a big bump in Bitcoin's price after the halving or before the halving, it's going to be tough. Now, of course, all of this could be totally invalidated if, Bitcoin rips and goes to like 60 plus, then we're looking at a different scenario. But then that is also tricky, because you have a dynamic where obviously the more profitable it is to mine Bitcoin, the more hash rate's getting deployed, which means difficulty's going up. So there's this constant kind of tug of war for what we call hash price equilibrium, where you're having new supply of hash rate come onto the market, and that affects difficulty, and then that affects profitability, right? And then when Bitcoin's price moves up or down, then that also affects the equation. So one of my predictions for after the halving is I think that a lot of like big miners, like public miners and private miners, they're already starting to do this. They're going to be looking for other lower cost jurisdictions to operate. So like some of the big places we've seen recently, like Paraguay, Argentina, some places in South America have become attractive. Paraguay's got the second largest hydro dam in the world. So a lot of cheap energy there that they don't really consume a lot, because the country's probably got, I think, 5 or 6 million people, and they produce like, just gushes of energy from that. A lot of it's sold to Brazil. I think that'll be a hot market. The Middle East is an emerging market as well. We're seeing some activity going on in Africa. So it's kind of tricky. There's a lot of corruption with a lot of, governments in Africa and their energy sectors. So there's definitely some considerations to make and some things that they have to navigate. But then the last bit to this, sorry, this is a really long-winded answer, but this is something that I obviously think about a lot with my research. Power management strategies and hedging strategies are going to become crucial for survival. I really think that if you're a mega miner and you have the ability to participate in demand response, you're going to be in a much better position because you can arbitrage the power market and hash price, right? So you're not as chained to Bitcoin mining economics when you're able to curtail or sell power back to the grid and then kind of capture some revenue from that as well. So
Very cool.
It's going to be tough. But then the last thing here though is hash rate. I expect probably somewhere between 20 and 30% of the hash rate will probably come offline after the halving, just in response to miners who are no longer profitable turning off, things like that. But then that kind of creates some buoyancy in terms of hash price, right? Because difficulty is going to drop, and so you should actually see after the immediate 50% reduction in hash price, you'll see a kind of gradual increase, kind of a bounce after that, because difficulty is going to be dropping, right? So
yeah,
that was a lot.
That was great. That was a really good overview, I feel like, of what's going to happen after the halving. I think I was watching Pierre Richard's Block Time, their podcast, and he was talking about the halving parties, and really some miners should probably be having a halving funeral.
Yeah, exactly. And some no doubt will, right?
Yeah, literally.
Yeah, seriously. And that's the other kind of aspect of this is as certain miners get washed out, you're probably going to see pretty good opportunity for distressed asset sales.
Yeah.
Mergers and acquisitions, or just not really probably mergers, but more just acquisitions of mining sites. Like CleanSpark is a great example. I know you just had Matt on recently, right? And they did a really good job in the last bear market of looking at distressed assets, buying up, plug and play sites that already had all the rigs in them. They already had the power purchasing agreements, and they scooped them up on, for pennies on the dollar for what they would have cost to build out, right? And so I think you'll see a lot of activity like that too. So there's definitely going to be an exit ramp. It's just a question of is that exit ramp good enough for you to recoup your capital, make a return, or are you going to be underwater after that? So
yeah. I also think of it though as I'm super bullish on Bitcoin from a very long-term perspective. And yes, I completely agree pretty much with all of what you said. If, price is still the same, a lot of the smaller, weaker miners are probably just going to get knocked out, and it's going to be tough for them. And then the larger players might benefit as difficulty falls, and maybe they get some larger percentage of the total market share. But if Bitcoin just, rips and an ETF gets approved and a lot of more additional capital gets into the space, I could see, $500,000 Bitcoin, over the next couple of years. And then all of a sudden we're back off to the races again of building maybe mining infrastructure in places that it shouldn't be built, signing power and hosting contracts that should never be signed, and buying ASICs at prices that should probably never be bought at. Do you think that if the price of Bitcoin does go to absurd level and we do have another parabolic bull market, do you think that that's going to happen again?
I think that's a very likely scenario, right? I mean, it's kind of like rinse and repeat each cycle. I think that we're going to get to a point eventually when the block subsidy is low enough to where, I think, so to answer it in 2 points,
yeah,
I do think on a long enough time frame, probably energy producers will be the majority of hash rate, of hash rate owners and operators. They'll probably have mining companies operate it for them. They may not have JVs, but energy producers or miners who are tied to the grid very closely are going to probably be the only ones on I'm talking 50, 100 plus year time frame, right?
Yeah.
They're going to be the ones who are operating the machines, right? That being said, to your point, we've seen $50, $60 per petahash hash price before. After the last halving in 2020, it was the lowest it had ever been, and people were having the same conversation. Right now, the majority of hash rate was still in China at that point, so it was kind of a different ball game because you just had a bunch of guys hooked up to the Three Gorges Dam or coal power plants in the coal-rich regions like Inner Mongolia and stuff, right? So, they had just dirt cheap power, and it didn't really matter that much. But miners in North America, the ones in Canada, and the few that were in the US at the time before the migration after the China ban, which happened in 2021, they were sweating for sure. But then what happened? Then Bitcoin just absolutely juiced. We went from I think 55 was $55 or $57 per petahash was the low, all the way up to 420 at the peak of the last, bull market. So, And a lot of that was caused by the fact that, China banned mining, like half of the network was turned off almost overnight. And you just saw this crazy, just ramp up of hash price. And so anyone plugged in anywhere else was just like printing money.
Yeah.
And then, Bitcoin went down to 30K, then went back up to 60K. And we saw, the average hash price for 2021 was somewhere in the ballpark of like $200 per petahash per day or something like that, or at least above that. And that's very rough numbers. So I do think that there's a possibility of that for sure. It's just like, can you hold on long enough?
Yeah.
Right. And I think that there's going to be probably just enough of a margin for a lot of guys to where they can hold on. And then for the public companies, it's also a matter of they have a bunch of instruments that they can leverage. Like maybe they're going to leverage their Bitcoin treasury to try to earn yield. Maybe they're going to sell it off to have cash to weather the storm. Maybe they're able to do, some sort of equity raise, like through an at-the-market offering or something similar. And then, maybe they can finance through debt or something. So like they have more instruments than most of the private miners to try to stay alive.
Yeah. And
I do think that kind of to your point, we will see maybe a flush out, but then, if Bitcoin just goes at super bull mode, all bets are off, right?
Yeah.
You're going to see investment into anything and everything for mining,
Yeah, definitely. I don't know if I've ever asked you about this, but the China mining ban, you hear people talk about like how FTX was, kind of selling fake Bitcoin back at the end of 2021, and maybe that suppressed the price. And then back in 2021, like you pointed out, Bitcoin was at, 60K or at least 50 something K at the first part of 2021. And then China mining ban happened and Bitcoin went down to like 30K. Do you think the China mining ban caused that price dip to some extent, or would you say no?
It's a good question. There is no hard evidence, but the entire mining ban coincided with a crackdown on crypto and Bitcoin in general. And we have heard reports of like, basically some of the like crypto riche in China basically being forced to sell their Bitcoin at that point.
Interesting.
Yeah, that might be rumor and speculation, and my memory's fuzzy on where I heard this, but the CCP be doing a lot of things, man. And I heard that for some of the guys that really had a lot of their wealth in Bitcoin or like USDT or something, USDT is really popular in China, because it's like it's not volatile and it's just an easy on ramp and off ramp to the US dollar.
Yeah.
But some people I heard were forced to liquidate their coins. You also just think about it from maybe even the migration perspective, maybe some of the miners had to sell some of their stacks just to pay for costs to move the rigs. I mean, you're talking about massive operations, right?
Yeah.
Like you need, maybe you've got even if you only have a few thousand ASICs, like the logistics of getting those down from the mountains in Sichuan where all the hydro is, putting them on a boat and shipping it to the US, then like putting money down for a PPA, buying up sites, like you have to have the capital for that from somewhere, right? So I definitely do think that could have been a consideration.
Yeah.
I think sometimes we take for granted how much of the market was driven by interest in China. I mean, even like this is kind of tangential, but you look at transaction fees after the China mining ban and they drop like that. I mean, like it was not uncommon to have 10 to 12 to 15 to 20% of all block rewards coming from transaction fees when mining was dominant in China. And then all of the Chinese miners turn off. And then for 2021, the average was like 1 to 2% of block rewards were transaction fees. And you kind of got to ask yourself, well, what's up with that? Some of it is the fact that the Chinese miners weren't using SegWit. Like, so they just didn't want to upgrade to SegWit, and like none of the pools like supported it. And then that changed after the mining ban. You can actually see SegWit usage go up in terms of UTXOs spent. But there's also, I've heard that sometimes the mining pools would kind of like play games in the mempool where they would just bid up transaction fees to raise the average transaction fee level, because, it's like Ant Pool via BTC and BTC.com were basically owned by the same entity. It was like they were Binance's pool, right? So it's like if you've got like 60% of the hash rate, and you're making those transaction fees back anyway, and it's going into your pocket, then like why not just try to like raise that floor? So who knows if that's true, But it's crazy when you look at the chart and you see stuff like that. So
yeah, definitely. I mean, that's pretty much what I've heard, and it seemed pretty reasonable. They were just spamming the mempool with transactions and getting a lot of that money back, and then making everyone else using the network pay more. So it makes sense.
Yeah.
You guys also I know Luxor is big into, you guys are starting to get big into hash rate derivatives. Can you kind of like explain what that is and why a miner should care? And then if you can, this might be difficult, but like why should a regular Bitcoin holder that just has a lot of Bitcoin, should they care at all about hash rate derivatives at all, or not really?
If they're a really good trader and they're trying to leverage their Bitcoin stack to earn more Bitcoin, it could make sense. But for most Bitcoin holders, no, it's not really something that like, your average guy, like, like your average Joe with like a hardware wallet and a few Bitcoin or even like 10 Bitcoin or something, like they're not really going to benefit from this. But so hash rate derivatives, kind of simply put, are a way for miners to hedge their exposure to hash rate. So miners can hedge their power prices. They can do that through a number of financial instruments or through like power purchasing agreements. They can hedge their Bitcoin price exposure through, Bitcoin futures and other financial instruments. But they had no real way of like hedging hash rate, which is like, almost like a commodity in its own right. Like Bitcoin is a commodity, but the compute power itself is also almost like a commodity too, like kind of in an abstract way. And so what Luxor kind of thought as well, in all other commodity producing sectors, like, you have forwards and derivatives for like corn, soybeans, you have it for oil, like all of these other commodities. There are financial instruments that commodity producers can use to hedge their exposure to the price of that commodity, right? So like great example, and like for like, farmers, right, with corn, they're trading all of the time because they don't know if their crop is going to be successful. Like maybe it rains too much, maybe it doesn't rain enough, maybe there's a blight, right? There's a lot of pricing, there's a lot of risks that they're taking on when they're planting a crop. And so if they can find a way to hedge their income or lock their income in for a specific time, instead of have to worry about what the price of corn is going to be a year from now, from after they're planting, right? And they're actually have harvested and processed it, then they would rather do that than, bank on, what's going to happen with the price of their commodity in a year, right? So for hash rate derivatives, we specifically use two different types. We use non-deliverable and deliverable forwards. So a non-deliverable forward would be a forward that is settled in USD or BTC. And non-deliverable just means that you're not getting physical delivery of the commodity you're producing. So like non-deliverable forward or deliverable forward would be actual physical delivery of that thing. So if you're doing like deliverable forward for corn or for oil, you get barrels of oil or you get bushels of corn, right? And so for hash rate derivatives, you would get actual physical delivery of the hash rate to a pool account. And so, and so what the hash rate forwards are, and we'll just talk about them kind of like on a high level from like the non-deliverable side, is what you're basically doing is you have a miner on one side who says, I have 100 petahash, and I want to sell this 100 petahash at, call it $80 per petahash per day for 3 or 4, 5, 6 months. Maybe 1 month, maybe 2 months. We offer up to 6 months. They can then lock in that price if there's a buyer on the other side who's willing to buy that production. And so it's basically a way for miners to lock in revenue, and it's a way for maybe TradFi or other investors to gain synthetic exposure to Bitcoin mining and Bitcoin itself, right? And in a way where they can actually, like, they're getting that miner's production, right? And then, the miner is making money for their hash rate regardless, and the investor is then either earning a spread from that because they bought at a price that is favorable, and then they can sell that later, right, and capture that spread, right? Or maybe they're losing out because they actually bought hash price at a crappy level and now they can't actually make a return on it. So I mean, you're kind of like, it's a trade, right? And so like you're going to win or lose based on that. But for miners, it's kind of a no-brainer because you can guarantee your revenue for a specific period of time. And this is great for a number of things. It's kind of great and for project financing, because a lot of miners, a problem that they'll have is they go to a financier and they're trying to take out a loan to build out more capacity. And the financier says, I want to see guaranteed revenue. And, if that financier is looking at hash price and they see like, oh wow, you know, like Bitcoin tanked by like 20% over 1 week and now your revenue is cut in half, or like even like, you know, like difficulties ramping up and your revenue gets destroyed over a month because a lot of hash rate is being deployed. If you can show them that it's like, hey, I've got 6 months of guaranteed income, then they might be more likely to underwrite a loan that then lets them buy more machines, more capacity, things like that. And we actually just released, so I was talking about non-deliverable and deliverable forwards. We just released our deliverable forwards product, which includes like fixed and upfront payment. So miners can now receive all of the payment for selling their hash rate forward like immediately. So if you're selling it for 6 months at $80 per petahash per day with like 100 petahash, you're receiving all of that money for your hash rate immediately in one block. So then they don't really have to sweat revenue for that month, and they can kind of like rest easy. Whatever happens to hash price, you know, they don't really care. And if it goes up, sure, they would have made more money if they were just going with, if they just like, you know, were mining every day and just taking the income straight from their pool account. But, you know, sometimes it goes down and then you're happy that you locked in that hash price when you could, right? So
yeah. Do you see like, if we do go into a pretty major bull market, do you see miners really taking advantage of this product like even more than they might be today? Like I could see if, you know, Bitcoin's at a crazy high price and hash price is a crazy high price, I could see them be like, oh, I kind of do want to kind of lock it in to some extent as much as I can before difficulty goes up.
Yeah, absolutely. I mean, I think that is something that is definitely feasible. One thing that we've seen recently, it's tricky. It really depends on what's driving the hash price increase, right? Like, so what we've seen recently with the ordinals and inscriptions things, right? Like transaction fees are going up, but it's extremely volatile, right? Like I think last week they went up to like they drove hash price up to like $90 per hash per day. And then the next day it was at 82, right? So, you know, traders, the people who are making markets on these things are not stupid. They see something like that, and it's sometimes hard to find a buyer because the buyer is going to be like, well, like, yeah, this miner is trying to sell it to me at like 85 right now, but I'm looking at what's happened in the past, and maybe this revenue is ephemeral, and it's just going to evaporate within a week. I mean, that happened with the inscriptions things most recently. I mean, inscriptions were, you know, kind of like the activity was all but dead, and, you know, transaction fees were back to like 2-3% of block rewards, and now I just looked today and they're like over 30%, right? So it really depends on what's driving it. I do think though that in a bull market, like absolutely these miners are incentivized to lock in those prices when they're there, and, you know, they're never going to get like 1-for-1 what the spot rate is, because, you know, again, there's that uncertainty. They're going to be able to just get just below it. And then, you know, there also are trading plays here where the people who are buying it, they're basically receiving, you know, Bitcoin mining income at a discount to spot. And so they might want to take a bet where they can buy it at a certain price and then they can resell it again and try to capture that return, right? Yeah. So there are a lot of different trading strategies. The trick is like, can you find buyers at all those levels, right? So
yeah, I kind of do want to talk a little bit about inscriptions and ordinals, because I feel like it's such an interesting topic.
I'll talk about it, man. I don't get it. I've never really been like in an like, I get the psychology behind it, but I just don't care about. You know what I mean? Like, and maybe I'm just not enough of a gambler.
Okay,
you know?
fair.
But anyway, sorry.
I actually didn't know what your perspective of it was going to be. I thought you might
thought I was an ordinal enjoyer. Yeah, I enjoy it as much as I actually just wrote an article for Bitcoin Magazine's print edition on this. Like as a miner, I love them. Yeah. Right. Like I'm
same.
Right. Like we're dollar and cents guys. Right. Like hash price was like scraping up against all-time lows. It was at like $60 per petahash per day. Like and I think in October or September. Mm-hmm. Yeah, and now it's back up above 70. I mean, I didn't think we would see that for a long time, right?
Yeah.
I mean, well, it's at 90 today, but you know, it's stayed consistently above 70 since this latest Bitcoin pump and the ordinals and inscriptions thing. Yeah, is there anything in particular like?
I mean, like we were talking about the China mining ban and how, like, you know, the mempool is kind of getting spammed, and that drove up transaction fees and, you know, made it more expensive to send Bitcoin. You know, obviously as a miner, whether you're in China or the US, you probably, you know, liked more transaction fees. Like, as you know, I own, you know, an ASIC, and I hope that, you know, there are more transaction fees for the ASIC, but I also, like, I'm a Bitcoiner, and I want people to have access to Bitcoin and be able to receive and send Bitcoin with, you know, little to no fees, so more people can take self-custody and use the network, I think, as it's intended to be used.
Yeah. So it's interesting. It's like it's an interesting case study because it's really putting the whole idea like block space as a free market to the test, right? Because it is like, if you're paying for the block space, you get to use it. Like, that's just how it works.
Yeah.
Like, I can criticize why you're using the block space, but like Bitcoin doesn't care. Like the miners don't care because they're seeing that these ordinal degens are like bidding up transaction fees and they love it, right? And what's interesting too is specifically what you're talking about. Galaxy Research put out a great report on ordinals. I'd recommend everyone read it if you want to learn more about how they impact block space dynamics specifically. But the interesting thing that report kind of revealed was the majority of the transaction fee increases aren't coming directly from the ordinals. They're actually coming from the indirect pressure that they place on the mempool.
Makes sense.
And, and most Bitcoin users, the vast majority of them are not as sophisticated, I think, as we would think. I think, like we're kind of in a bubble with like professionals and people who like really love Bitcoin and have done a lot of time to learn how it works. And, every time I send a transaction, I'm going to mempool.space to see like how much can I get away with where I'm not going to be waiting like 3 days for this to clear, right? But most people just use the transaction fee estimators on their wallet, which are overly conservative because they want to make sure that no one's like DMing support and be like, well, my transaction like didn't get confirmed. Like, it's like I'm waiting for it. Like, this is important. And all of the exchanges are the same way. And the exchanges are the same way too, because they partially want to capture a little bit of that spread from that transaction fee, right? But so what happened with the most recent inscription spree, which were driven specifically by, I'm going to try to make this as simple as possible, but it's so freaking complicated. It's such a weird rabbit hole. The first inscriptions were image-based, and those benefited from SegWit's data discount. So for most of your listeners probably know what SegWit did for block space, but and for block weight. But what SegWit did specifically was it took the script sig, which has the private key signature and the public key for a transaction, and it moved it from the transaction hash section and it put it into a separate part of the block. What this in that part of the block is discounted in terms of how many satoshis it counts per byte of data. So it's like it's a 4-to-1 discount. So for every 4 bytes of data in the transaction section of the block, the SegWit section is discounted, and it only counts for one. It's block weight. I still don't understand why we use block weight. I kind of get it. But basically, it's going to be discounted by like 4-to-1 there. And so the image-based inscriptions are benefit from the SegWit discount because the actual arbitrary data for the JPEG or whatever you're inscribing lives in the SegWit section of the block. So the early images were not actually driving fees that much because they didn't cost that much actually to transact, because the majority of the data was just the transaction data, and all of the arbitrary data that was actually heavy was SegWit discounted. Well, that changed when we started getting these things called BRC20s, and BRC20s are basically it's an opcode function. So like, Bitcoin has opcode functions that are kind of like if-then statements for transactions. And what the BRC20s were is you would basically create an opcode for a deploy contract, they'd call them, and then you'd give it a ticker, so like ORDI, ORDI, and then you would have a maximum supply for that token series, and then you would have a minting limit per transaction. So for ORDI, I think it was like 21 million, and then there was 1,000 minting limit per transaction. So this does two things. One, those don't benefit from the SegWit discount nearly as much. And two, this finally created Ethereum-esque minting incentives for ordinals. Because, part of the appeal of NFTs on Ethereum was it was like opening up a pack of Pokemon cards or like tops, like baseball or football cards, right? You would go onto whatever, crypto kitties or freaking punks or apes, right? And you would interact with the smart contract that would mint the NFT for you, and you didn't know what you were going to get. Like, are you going to get like an ape with like a crown and like a cigarette hanging out, or like, are you going to get like a dude with like his eyeball, just like dumb shit. But kind of the appeal there was this kind of like you're rolling the dice, or you're like opening up a pack of cards, and you might get something new or rare every single time, right? And so, but you were also trying to beat everyone else to those NFTs, right? You wanted to be first to mint whatever in a series. You wanted to be the first to get like the first ape or like an under 100 ape for whatever thing it was, right? And so for the BRC20s, it kind of created the same incentives because you wanted to be the first to mint the BRC20 series. You wanted to get like the first one in the series, or like, you know, under 100 or something. So everyone started kind of trying to outpace each other and outbid each other to mint these BRC20 tokens.
Interesting.
Yeah, and so what that ends up doing is you end up flooding the mempool with those, and then that creates indirect pressure on all of the other Bitcoin users who now have to bid up their transaction fees to try to get priority placement in blocks.
Yep.
And so I think it was the numbers that I crunched, it was like since Ordinals have been introduced, they have accounted for, I think it was 20% of all transaction fees, but 30% of transaction fee volume since December 2022. And that kind of illustrates the point, and this is what Galaxy points out in their research report, is that when you look at what was driving a lot of the fees, it was actually overpayment from economic users, from people just sending normal transactions. Yeah. And so from that perspective, I am kind of like you, I'm kind of torn. It's not I don't think it's not a good thing for Bitcoin's utility. It's not a good thing for average users, right? Because like at the end of the day, you know, maybe there are legitimate use cases for inscriptions. A lot of the guys on our team have talked about like some pretty cool applications, potentially down the road. But, you know, like the BRC20 tokens are just, they're text. They're literally just text-based inscriptions floating around in the mempool until they get put into a block. Yeah. And like, I don't really understand the utility of that outside of just trying to make money and gambling. It's just like all speculation. So
yeah, it is interesting because like I feel like the core ethos of Bitcoin is having a low time preference, thinking far out into the future, not gambling, and doing things in a fairly conservative manner. And then you have like crypto and BRC20 tokens that are kind of like the exact opposite of what Bitcoin stands for. Even though I think a lot of people get into Bitcoin because they're like gambling or they're greedy and they're like, oh, the number go up. For sure. But then they later learn that like, oh, this is just long-term savings technology and I just need to sit and hold it and maybe not just think, hey, how do I make money today or tomorrow, but how do I preserve my capital for the next 5, 10, 50, 100 years? So yeah, it's kind of different. It's kind of interesting, like, you know, contrasting those two, like the Ordinals and Bitcoin itself.
Yeah, and I think that you're right to point that out because it really is a different perspective. I mean, it's no accident that most of the Ordinals and inscriptions guys are like, they migrated from the Ethereum ecosystem. Yeah. So like a lot of the guys who are active and a lot of the guys who are like really passionate and or like minting a lot of this stuff or trying to like make money from it, they were doing the same on Ethereum and like Solana and like other NFT chains, right? Now, not to be totally pessimistic there, because there's also like, we've seen a lot of like younger kids and newcomers come in and like Ordinals have gotten them to like download Bitcoin Core and learn about transaction structure. And like, you know, and they're learning about a lot of technical like topics and the inner workings of Bitcoin that like most Bitcoiners actually don't really take much, you know, like they think they know it, but when you really get down to like block, like transaction construction and like all this other stuff, there's 100 different ways that you can do it. And it's super complicated. So it's kind of been cool for that, for that point. Like, it's like kind of been a really like strangely like educational tool for like how Bitcoin works. Yeah. But I do think that there is kind of a conflicting incentive here for why people are using it, right? And again, I'm not going to tell you that you can't pay for the block space or that you shouldn't. I think trying to censor them is really, to me, against the whole point of having a permissionless blockchain. But at the same time, like, that doesn't mean that we can't criticize it. Like, I don't really think that on a long enough time frame, something like this is necessarily very good. And I also don't buy the argument that it's necessary for Bitcoin's like security budget. Like, right? Like, that's something that a lot of people say. It's like, well, it's raising transaction fees and eventually we're going to have to rely on transaction fees, right? And, you know, kind of going back to what I was saying, if you assume on a long enough time frame that energy producers are going to be the one mining Bitcoin, like arbitraging energy prices or just soaking up excess electricity when they can't sell it, you know, I think that whatever transaction fees in, you know, 100 years when we no longer have any block subsidy, it's probably going to be enough if Bitcoin goes, if Bitcoin goes where we think it's all going and there's enough uses on the network. And there will probably also be alternative uses for block space or alternative ways to monetize it that we haven't even thought of. You know, there will be new applications at that point. So anyway, I kind of shudder to think that like, you know, monkey JPEGs and like text-based inscriptions are going to be the thing that keep miners afloat in like 50 years.
Yeah, I mean, and it's just kind of funny to think about, because like if, you know, Bitcoin security budget, which I don't even really like that term to begin with, but like if monkey JPEGs fix Bitcoin security budget, then Bitcoin is broken to begin with.
Yeah, right.
We can't rely on that. So yeah, I agree. I don't think it's something to worry about, and I don't think that it really makes much sense. I know you guys also have an ASIC trading desk, and I know I worked at Blockware, and Blockware has the Blockware Marketplace, which is like more about like hosted ASICs, and you guys have the non-hosted ASIC trading desk, which is really cool. Have you guys seen like specific flows of ASICs? I know like you guys have posted pretty cool charts where it's like a map of the world showing like all the different places you guys have bought and sold ASICs from. Are there like currently or in the past, have you guys noticed flows of like, oh, machines are going from the US to Paraguay or from China to wherever? Like, have there been any trends recently or in the past that you think are worth mentioning?
Yeah, I think the biggest one, and this is not us specifically because we can't operate in this market because of sanctions, but the Russians are deploying hella hash rate right now. Like a lot of, when I was in Hong Kong for the World Digital Mining Summit, there were a bunch of Eastern Europeans and Russians there, and Bitmain and some of our and then some secondary sellers that we're pretty close with, were saying that right now Russia is like their biggest market by far.
Interesting.
Maybe not by far, but it's like the majority of some of the sales that they're doing. And there's probably a number of reasons for that I don't know if I'm like totally equipped to speak on, but what I've heard is that, you know, a lot of people are trying to escape the ruble. You know, like the war with Ukraine has created a lot of question marks for like what's going to happen to the country in the future, or like just, you know, the sanctions put a lot of pressure too on Russian capital markets and all these other things. Now, sure, like they're opening up, you know, trading avenues with like BRICS countries and like other countries in Asia and things like that. But it seems like a lot of Russians are trying to find ways to, earn a return at a time when like they're kind of shut out from like all of the capital markets that they would otherwise be able to tap into.
Yeah.
You know, Russia's flush with natural resources. I mean, they've got shitloads of oil and shitloads of natural gas. So it seems like a pretty understandable fit. And I think that, you know, it's going to be those markets, places like Russia, places in South America that have cheaper energy, maybe some places in the Middle East, and that's what North American miners are going to be competing against when the halving comes. And so, you know, I think that you'll probably continue to see you'll continue to see market share increase in those regions, I think, because I'm kind of the mind that maybe North America, from a hash rate perspective, has kind of peaked. But I'd love to be proven wrong.
You're talking about like as a percentage of total network hash rate?
Yeah. Like there's always going to be capital investment, and there's always going to be miners deploying rigs. There's always going to be someone who has cheap enough energy to deploy the rigs. But I think that in terms of what we've seen over the last, the China mining ban, and since then till now, so we probably reached some sort of peak. I could be totally wrong, and part of me hopes that I'm wrong, part of me hopes that I'm not, because I do think that decentralization of hash rate is important. Like, I don't really care if hash rate is in Russia. I don't care if hash rate is in China, which there's not really much anymore, but there's still some. You know, like I don't care about politicizing where it is, and I think that there could be potential, not attack vectors, but like stuff like the OFAC compliant blocks, right? That we saw like Marathon trying to push for a while there. Yeah. I mean, if the government really wanted to in the US and they went to miners and they said, you can't process transactions from these sanctioned addresses, then that's a very real reality. So,
yeah. You're bringing up Russia is interesting. It's funny how like censorship is such like an interesting advertisement for Bitcoin. Like it really makes the value proposition of Bitcoin so much more clear. And I'm not surprised at all that people in Russia or, you know, the government itself or private companies or whoever is like, wait, we can be cut off from the entire global financial system like that? We need another technology that still works over the internet, and we can, send value to other people and receive, physical goods or digital services or whatever. Just seems like over time, if censorship does become more of a problem for other countries or even in the US, like Bitcoin will probably be there as a pretty good solution.
Yeah. And I'm glad that you brought up the getting cut off from SWIFT and just totally cut off from like capital markets in all of the other Western nations, because I think that is probably a huge driver for that for sure.
Yeah, definitely. Let's talk a little bit more about energy markets, I guess. Like, obviously, energy is a critical component to mining Bitcoin. It's like the highest variable cost, I guess. Can you tell us a little bit about like energy markets in the U.S.? Like, maybe talk a little bit about nuclear. I'll leave this open-ended, but how do you want to take it?
Yeah, I think that if you look at where most of the hash rate is concentrated in the U.S., it's no surprise that it's in those areas like, Texas with, basically deregulated is not the right word, but, it's a totally open market for energy. Like, as long as you check the right boxes and get approved, energy companies come in here and they can buy and sell on an open market. And that, Bitcoin miners love that because it, that drives down the price. Historically, it's started to become a little bit iffy because they've overinvested in wind and solar. That's why you see price spikes in Texas in the summer, because the wind doesn't blow. And then what they expect to get 20%, Texas expects to get 20% of its grid's capacity from wind on a given day, which is pretty crazy when you think about it. Like, that's a lot of energy to be betting on actually having the wind blowing in your favor at a given time, right? So, I mean, Pierre does great message, kind of like micro kind of research about this, or tweets. Like, he'll talk about like, power prices are spiking up because the wind's not blowing, like, and wind is underperforming. And so, and in Texas, we've actually seen over the last few years, power prices have gone up significantly because their energy generation has been more and more contingent on, intermittent and at times unreliable renewable sources. And that's what a lot of people don't understand, I think. And like, energy systems are super complex. I've just been amazed at how much I didn't understand at all about energy and specifically electricity generation until I started in the Bitcoin mining industry. But I think a lot of people think that like 1 megawatt is the same as another megawatt. Like, they think that it's just like all kind of fungible. But no, there are resources and there are energy generation. There are electricity capacity factors that are much better than others, and certain assets are much more reliable. Yep. And when you see renewables not functioning properly or just not producing enough to meet demand, you see base loads ramp up like nat gas or coal or something like that. And kind of extending that out to the rest of the US, there's a reason there are no miners in California, because California has like some of the highest electricity prices in the US. I think it's third behind Hawaii and maybe Alaska. And part of that is because they've got a lot of wind and a lot of solar, and they've been decommissioning nuclear power plants because we're allergic for some reason in this country to nuclear for a lot of reasons that are pretty deep. They go back to, just people think of Chernobyl, they think of 3 Mile Island, they think of Fukushima, and they think it's this extremely dangerous thing. But then you go to the Southeast, and you go to a place like Georgia, and Georgia's just flush with the nuclear. Tennessee's got a lot of nuclear too. It's got a lot of hydro. South Carolina's got a lot of nuclear. And there are more miners than I think a lot of people would think in these regions, because the power prices are some of the most competitive in the US. Georgia has, I think, industrial wise, like any given year, like 6 to 7 cents per kilowatt hour. You can't really get any better than that. Tennessee's the same way. South Carolina is pretty similar. And a lot of that is thanks to the fact that they didn't take the solar pill. They didn't take the wind pill, right? Like, you look at the energy systems in those states, and it's mostly nuclear and it's mostly nat gas. They might have some renewables, but it's a very small slice of the pie. And I think there's, without getting too political about it, it makes total sense to me. I mean, these are conservative areas. They're dollars and cents. They usually are not kind of captured by narratives, and they invest in things that are just going to work and that they're going to be reliable. And yeah, you mentioned nuclear. I think that the best thing that we could do for our grid, for energy independence, and if you want to talk about the climate angle, the best thing you can do to reduce emissions is nuclear. I mean, pound for pound, it is the cleanest form of energy that we have devised as humans. And the only reason that it's not more popular, I think, is a few things. Like I said, those disasters, which is just total fake news, because there's only one documented case of someone dying from nuclear radiation fallout in Fukushima. And like the only reason that Chernobyl was as bad as it was is because they were using the outdated reactor at the time that it melted down, right? And so, like, yeah, you're not going to be able to abstract away for all of you're not going to be able to totally save yourself from some of those accidents. But even with the accidents that we have had outside of Chernobyl, they haven't been that catastrophic. I mean, if you want to look at energy sources that are the worst in terms of, actual exposure deaths and stuff like that, coal is terrible.
Yeah.
Coal is awful. And what happened in Germany? Germany shut down all of its nuclear power plants, and now the majority of its power capacity comes from coal. So it's this weird kind of tug of war with the environmentalists. It's like they think that they're doing this great thing, like we're going to hasten the transition to solar and wind energy for all. And then what ends up happening, same thing happened in Pennsylvania recently. It's actually just a big boondoggle for oil and gas and coal for the fossil fuel industries, because they're the ones who benefit most, because you need base load, and you're not going to get that from renewables. So
yeah, it's funny how some people think that because you might be, or whoever might be, anti-wind or anti-solar, they also they think they just naturally hate the environment, when in reality it's no one really hates the environment. Yeah, you're probably by getting the materials and the resources to build solar panels and wind turbines and replace them and clean them and all this stuff, you might be damaging the environment more by doing that versus building a massive nuclear power plant or a small nuclear power plant.
Yeah, absolutely. I think that's an important point, because people don't actually know what goes into refining a solar panel. Steve Barber of Upstream Data calls them Kohler panels.
Yeah.
Because, you have to have massive diesel-powered equipment to extract the minerals. Then you have to have coal-fired power plants to actually refine them into solar panels. And then you're putting them on diesel ships to ship them to the U.S. And it's it depends on how you're doing the carbon accounting, right? That's the thing. They always do these this is the carbon footprint of this thing. And when you look at carbon accounting for solar panels or wind turbines, they don't factor any of that stuff in, and it's if you want to do more honest carbon accounting, and I've seen these numbers, it's actually worse to do that on a long-term basis versus just putting up a nat gas power plant, right? If depending on how you're looking at it, right? You can play with the data any way you want, but I think it goes back to people just don't understand how these systems work. They don't understand how complex they are and what goes into them. And and I think that's a good point too. It's oh, you don't like solar or wind? You must hate the environment, bro. It's first of all, I like solar where it makes sense. Yeah. If it was cost effective, I'd put solar on my house.
Yeah.
For microgrid stuff, it's cool. And it's just, it as long as you have a way to actually store the energy, which I think battery technology eventually will get to a point where that's more viable. Absolutely, I'd love to see solar in microgrids, love to see it on houses. I think that that's great, because that's also energy independence, right?
Yeah.
You don't have to rely on the grid to produce your own energy after a certain point. I think that's really cool. But yeah, it's you could also make the same argument to environmentalists. It's oh, so you don't like nuclear, you hate the environment? No, they think they're doing it a favor, because they also don't realize that nuclear waste is super safe to store. And here's one of my other favorite factoids. All of the nuclear waste that has been produced in the United States since we started deploying reactors could fit on a football field stacked 50 meters high.
Wow.
And most of the stuff is stored on site at the nuclear sites anyway. They think they're just going to have toxic waste dumps, and it's just not. It's the most regulated. It's the most regulated form of energy we have, and that also causes some problems with build outs, right? You'll have guys making a nuclear power plant. They lay a bunch of concrete for the base, and an inspector will come in one rebar is like, an inch or two off of where it's supposed to be, and they have to tear up the entire thing. And it's like, what are we doing here? Like, do we actually care about energy independence and reducing emissions, or are we just here to like dick around? I don't know.
Yeah. You talked about microgrids and like being energy independent. I think like part of what makes Bitcoin so cool is that you can be free and you can be sovereign. Like, do you think Bitcoin mining will like encourage more energy independence, or like the build out of microgrids at all, or like being able to be sufficient like at your own home or within your community and like produce the energy for that specific community? Because like part of like the grid's cool and all, and massive nuclear power plants are cool, but it's also kind of scary to think that we could all be dependent on the grid. I mean, to some extent we definitely are today. What do you think?
I think that there's a good argument to be made that Bitcoin can incentivize building out those things, in the sense that like, and also renewables too. So I just spent like the last like 15 minutes kind of dumping on renewables, but like, let's assume that you are going to continue to build out this capacity, right? And I don't think that wind farms or solar is going away. But one of the problems with building out some of those grids is, they're in the middle of nowhere, they're in the desert, they're in West Texas, and you have to build transmission lines, high voltage, like multi-million-dollar projects that take, long time, man. And what do you do when you're building out that capacity and you can't ROI it for a couple of years? Well, you can slap a Bitcoin mine there, and then you can immediately dispatch that electricity and earn income for it. And I think this is something, we talk about it in mining a lot, and it's somewhat theoretical because it's not being done at scale, like a massive scale. But, it's a really cool use case, and it's a really revolutionary thing to think that you have a buyer of first and last resort at any energy producing, on any energy producing asset in the world. I mean, that's just never happened. You've never been able to immediately dispatch of something like that and turn energy and electricity into monetary value without there being mass infrastructure to bring it to, commercial, residential, industrial, and things like that. And I think for the nuclear case, this is also probably pretty, could be potentially good for nuclear, because nuclear build outs take a long time. They're extremely capital intensive. But if you can tell them that, once you have this thing up, even when you overproduce, you can soak up that electricity and earn income from it. Maybe that helps ease some of the burdens for capitalizing one of these projects. So, and in terms of like micro grids and stuff, I would love to have solar on my house one day for exactly that, like being able to monetize the excess energy and be able to maybe even pay off my loan for putting that solar up with Bitcoin mining. I think that it absolutely has a use case. It's just a matter of like, you got to kind of get creative with it, and like, what is the specific, what's the specific energy asset that you're trying to monetize? So
yeah, definitely. This might be one of the last questions, but I think it could be interesting to hear what you say here. We talked about the China mining ban back in 2021. Is the ban still active right now? And if it is, like, is there anyone still mining Bitcoin in China, or?
So yes and yes to both. The ban is very much still active, but there's still capacity in China that the CCP tolerates for a number of reasons. I mean, I think it's important to remember, and this is for any government, I think, as much as I like to kind of like wax about like the uniparty or the deep state, or like, I call it the regime, whatever you want to call it. Even in the US government, there are multiple competing factions, right? And there are multiple competing interests. And China is, India recently surpassed them, but China is the second largest country by population in the world. And the CCP is a monolith, but it's not, that doesn't mean that there aren't, a bunch of different pockets that within it, right? And so if you know someone at the CCP, if you're well connected, you're still hashing, right? And even if you're not, maybe you're taking a risk.
Yeah.
Maybe you're like, you've got like 1 megawatt or even less, and you're just like, they're probably not going to find out, right? Or it's just like two small potatoes to worry about. What I do know is that for the sites that are still active, it's probably in that 1 to 5 megawatt range. Like, you're not going to get much bigger than that, or else they're going to find out. And if you do have more than that, it's probably no more than 10, because maybe you're well connected enough to have a site that large, but they're That's probably kind of the like I've heard is kind of like the maximum. The real thing is though, it's like they'll tolerate you mining to a point, but you can't import rigs. So if you try to import rigs into China, like you and the person who sold them to you, if they're a Chinese citizen, could face, prosecution.
Interesting.
But that still doesn't stop them from trying, right? So you see actually like some miners will import rigs to China, but they'll like disassemble them and just ship them piecemeal and then reassemble them back in China, right? So it's like you're definitely taking a risk, but it's not as risky as like, customs opens it up and then it's just clearly a Bitcoin miner, right? But if it's a bunch of fans and just like hash boards and like the chassis, then it's just like, okay, well this could be, it's a computer. It could be anything, right? And the last thing about that too, it's interesting because you're not able to import new rigs, they're all operating older equipment. So it's like you still probably have some S9s active in China, S17s, M20s, some S19s that were there before the ban and stuff like that. But like the XPs, the S21s, stuff like that, they're not going to be able to operate those. So assuming that this ban holds up and that they can't import more black market rigs as fast as the rest of the world can upgrade their hash rate, we should continue to see whatever China's dominance is for hash rate or their share of hash rate continue to decline. It's anywhere from maybe 10 to 20% right now, probably 10 to 15.
Yeah.
And so you could probably expect that to continue to get chipped away as more countries deploy hash. So,
yeah, interesting. Yeah, I was wondering, like, as you were talking about, I was like, is it still less than 1%? But you think it's still like 10%?
It could be as much. It could be. When we ran numbers for our end of year report, and I think also maybe for the Q2 report this year, I mean, the upper bound was probably about 20%, which is still pretty significant, right? I think people underestimate just how much was going on in that region, right? But I would say probably, a conservative estimate would be 10%.
Nice, cool.
Yeah.
Last question, then we can wrap it up. 10, 20 years from now, where do you see the Bitcoin mining industry? And then also, like, where do you see Bitcoin?
Oh man, where do I see Bitcoin? I don't like doing price predictions.
But it doesn't have to be about price at all, yeah.
So I see Bitcoin mining kind of like I was saying earlier. I think that you're going to see continued integration with energy companies, energy producers, things like that. I think that the natural progression of this technology, it is going to be a feature of grids going forward. Once enough energy companies, and they're starting to get tuned into it, there's a lot of hype and a lot of misinformation. And, like the wider crypto industry really can paint it in a bad light sometimes. So sometimes it's hard to convince, especially a lot of these guys are like old, right? Like they're boomers or they're Gen Xers and like maybe they don't understand it very well or they're kind of wary about it. But once you kind of like separate the Bitcoin part from the Bitcoin mining part, which I know that sounds kind of weird, but I think there's an entirely different thing to own Bitcoin outright. And there's another thing to have an income producing asset like Hashrate, right? Like having actual production I know for my dad, it was the thing that got him finally to understand it. He's like, oh, so there's energy backing this thing. This is a commodity production business. Once you can convince enough energy operators that this is a way for them to monetize excess energy, I think you're just going to see it snowball. I mean, to me, it's just almost so simple. It seems stupid, but like if you can just slap, a data center, on an energy producing asset, it doesn't have to be big. Maybe it's just a few boxes, right? A few ant boxes or like, the containers. It just makes sense to be able to deploy that hash rate, to soak up excess electricity. So I think that in 10, 20 years, you're going to see more energy producers. Mining as a business will be completely different. It'll be like the kind of pure play mining companies that we see now won't exist, at least not in their current form. A lot of the mining companies will probably transition into operators for these power producers and for these power plants or power companies. As for where I see Bitcoin, that's tough, man. I think it's undeniable that it's becoming a feature of financial systems. I think that you don't have to think that it's going to become the world reserve currency to accept that it's going to be a feature of financial and capital markets going forward. And I think that, whether or not I'm like being able to go to, my local coffee shop or like Target or like Safeway or something and buy my groceries with Bitcoin, maybe that's coming. I personally don't think that will be like, I don't, it's Gresham's law, right? Like, I don't want to spend my Bitcoin. I want to spend my dollars so that I can then save in Bitcoin, right? I think that potentially, though, it could be interesting to see if nation states or, financial institutions start using it as a sort of settlement layer. I do think that volatility will be a problem. I don't think that people want to use something that's volatile as a settlement layer. Maybe fiat apocalypse really does happen, though, and we go back to commodity-backed money, which I think that, in kind of like while this, like cypherpunk, Bitcoin utopic dreams is kind of seeing some sort of commodity-backed money, and maybe that's backed by Bitcoin, right? Like, I think it is conceivable that you might have some nations that do have a sort of fiat currency. Well, it wouldn't be fiat at that point, but it would be some sort of currency that is backed by Bitcoin reserves or some sort of hard money, right? I mean, like, people forget, I don't need to tell this to you, but the whole fiat experiment is, 50 years old, really? So people think that this is just the way that money is, but it's actually not been the way that money is for a long time.
Yeah.
So...
yeah, no, that's a good answer. This is definitely an experiment. I think people say Bitcoin's an experiment, but over time, people might be like, actually, this is not the experiment.
Yeah, or maybe this is the safer experiment.
Yeah,
what
exactly.
I mean? Like,
I guess everything's technically kind of an experiment.
Yeah, everything is just subject to market forces, supply and demand, and network effects. And maybe I'm naive or crazy, but I'm at the point with Bitcoin where it's like, I just don't really see it going away until something better comes around. And maybe that better thing will come eventually, but in our lifetimes, like, and again, maybe this is foolish, but I foresee it being just a feature of financial systems, of economies, and whatever form that takes is up to the people who are sending it, right, and accepting it. So
yeah, and even if something better comes around, I mean, I feel like at the end of the day, Bitcoin is just an accounting system, just a ledger of like who owns what, and it's a fixed amount. It's like, how can you improve a fixed amount? Like, the software around it could change, but as long as you keep that accounting system that was just distributed through proof of work, where there were no insiders, then like the transaction process could change, the way we settle Bitcoin could change, or whatever we call Bitcoin. But it's like the invention was this immutable ledger that we can't change, and I have a hard time seeing how something could replace it, but time will tell.
Yeah, I know. I feel like it's like, I don't know, it was probably hard for people to conceptualize gold coinage being replaced by paper money in banks, but eventually maybe something will come around, but I don't know what that would look like either. So
yeah. Well, Colin, this was fun. Talk about mining, talk about Bitcoin. So I enjoyed it. I'm glad we could do this.
Yeah, this was awesome, Joe. Really appreciate it, man.
Yeah, thanks.